Non-oil domestic exports, NODX, are goods that are produced in Singapore and shipped to other countries, excluding oil products. NODX account for about 60% of Singapore's total exports and are a key indicator of the country's trade performance. NODX are important for Singapore's economy because they reflect the demand for its products and services in the global market. Singapore is a small and open economy that relies heavily on trade and foreign investment. NODX are also a major source of income and employment for many sectors, such as manufacturing, electronics, chemicals, pharmaceuticals, and logistics. However, NODX have been declining for 7 consecutive months since October 2022, due to various factors such as the global chip shortage, supply chain disruptions, weak demand from China and other major trading partners, and the resurgence of COVID-19 cases in some regions. This has raised concerns about the outlook for Singapore's economic recovery and growth in 2023. In this section, we will analyze the main factors behind the decline of NODX in April 2023, such as the slowdown in global demand, the trade tensions between the EU and China, and the disruption caused by the COVID-19 pandemic. First, let's look at the slowdown in global demand. According to Enterprise Singapore, Singapore's NODX contracted by 8.3% year-on-year in March 2023, following a 15.8% contraction in February and a 25% contraction in January. This was mainly due to lower exports to Indonesia, China, and Malaysia, which offset the increase in exports to the EU and South Korea. The decline in NODX was driven by both electronics and non-electronics products, especially ICs, disc media products, parts of PCs, non-monetary gold, petrochemicals, and food preparations. These products are sensitive to changes in global demand and consumer preferences, which have been affected by the uncertainty and volatility caused by the pandemic and the trade war. Second, let's examine the trade tensions between the EU and China. As two of Singapore's largest trading partners, any escalation or de-escalation of their trade dispute has a significant impact on Singapore's NODX. In April 2023, the EU and China announced that they would resume high-level talks to resolve their long-standing trade issues. This raised hopes for a possible breakthrough that could ease the tariffs and restrictions imposed by both sides on each other's goods and services. However, the talks also faced challenges and risks, such as disagreements over intellectual property rights, technology transfer, market access, and human rights. Therefore, the outcome of the talks remained uncertain and could affect Singapore's NODX positively or negatively depending on the progress and results. Third, let's explore the disruption caused by the COVID-19 pandemic. The pandemic has been a major shock to the global economy and trade since early 2020. It has disrupted supply chains, reduced consumer spending, lowered business confidence, and increased health risks. Although some countries have managed to contain the virus and roll out vaccination programs, others have struggled with new variants and outbreaks that have forced them to impose lockdowns and restrictions again. This has created uneven and fragile recovery across regions and sectors, which has affected Singapore's NODX as well. For instance, Singapore's exports of pharmaceuticals, which surged during the peak of the pandemic due to high demand for medical supplies, have moderated in recent months as demand normalized. On the other hand, Singapore's exports of non-monetary gold, which soared during the height of the uncertainty as a safe haven asset, have declined sharply as risk appetite improved. In conclusion, we have analyzed the main factors behind the decline of NODX in April 2023, such as the slowdown in global demand, the trade tensions between the EU and China, and the disruption caused by the COVID-19 pandemic. These factors have interacted with each other and influenced Singapore's NODX in different ways and degrees. As such, Singapore's NODX outlook for 2023 remains challenging and uncertain, depending on how these factors evolve and affect global trade conditions. Singapore's non-oil domestic exports, NODX, have been falling for 7 consecutive months, posting the worst performance in a decade. In April 2023, NODX dropped by 9.8% year-on-year, steeper than the market forecast of a 9% decline. Both electronic and non-electronic products contributed to the slump, with exports to China, the EU, and Hong Kong plunging by more than 40%, 30%, and 50% respectively. What are the outlook and challenges for Singapore's export sector in the face of this prolonged downturn? Here are some key points to consider. The prospects of recovery in key markets are uncertain and depend on various factors, such as the global pandemic situation, the pace of vaccination, the trade tensions between major economies, and the demand for semiconductors and other high-tech products. Some analysts expect a modest rebound in NODX in the second half of 2023, driven by a gradual improvement in global demand and supply chains. Others are more pessimistic and predict further falls in NODX due to weak external demand and rising costs. The diversification of export products and destinations is crucial for Singapore to reduce its reliance on a few markets and sectors, and to tap into new opportunities in emerging markets and industries. Singapore has been diversifying its NODX portfolio over the years, expanding its exports of non-electronic products such as chemicals, pharmaceuticals, petrochemicals, and biotechnology products. It has also been exploring new markets such as India, Vietnam, Indonesia, and the Middle East. However, more efforts are needed to enhance Singapore's competitiveness and resilience in the global market. The need for innovation and digitalization is imperative for Singapore to maintain its edge as a leading exporter of high-value-added products and services. Singapore has been investing heavily in research and development, digital infrastructure, talent development, and industry transformation to support its export sector. For example, it has launched various initiatives such as the Research Innovation Enterprise 2025 Plan, the Industry Transformation Maps, the Digital Economy Framework for Action, and the Global Innovation Alliance. These initiatives aim to foster a culture of innovation, collaboration, and entrepreneurship among Singapore's exporters, and to help them leverage on digital technologies to create new value and reach new customers.